Hello, investors. Thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today, I want to talk about Zillow. So, if you're following this, you probably know by now that Zillow's iBuying or home segment hasn't worked out. Forget about that. Moving on from that. So, I'm going to go through and just unpick what I believe is a reasonable opportunity at 15.5 billion market cap. So, there's a lot of assumptions here that I've made, but whenever possible, I've tried to be on the side of caution, but I also try to be realistic. Ultimately, I believe that Zillow's underlying business trades at approximately 19 times forwards free cash flow, not sales, not EBITDA, actual free cash flow. So the stock is down meaningfully. I mean, you know that, I know that, everyone knows that. There's not a lot to talk about that. I mean, I'm not even picking the highs here. Just since the year started, it's down approximately 46%. And I don't suspect this is going to be the bottom. You can never really time the bottom. Um, there's a lot, obviously, obfuscating its results. There's in the guidance right up for Q4, they still put out, including the home segment. I'll just refer to it as iBuying, the iBuying segment. So it's a bit muddled. You're not going to get a clear image of the actual underlying business until probably get into probably like Q2 2022, and that you'll probably start to get some kind of idea of the IMT segment. So the IMT segment is essentially stands for Internet, Media, and Technologies. But the way to think about it is just an advertising platform, okay? Just, if you're a broker and you want to list your property, you're going to go to Zillow. You can go elsewhere as well, but you're going to end up on Zillow, okay? So it's an advertising platform. Around the globe, there are other ones like in the UK, there's Rightmove, RIA in Australia. So there are other ones, but if you want to go in the US, this is like the one to go for. Now, Zillow's IMT segment has been growing at approximately 15% compounded annual growth rates, CAGR. So there's some bumpiness here because of COVID, and that kind of skews things slightly. But the number I want you to think about for the IMT segment is 15%. Okay, if we look out for its guidance for Q4, it's pointing towards 487 million, which also again is around that figure of 15% CAGR. So let's just use this figure. Okay. Now, what attracts me a lot about the IMT segment is the profit margin. So it has EBITDA profit margins of approximately 40 to 45%. So that's a really high margin business. So that's why I'm quite interested here. So 40 to 45. So let's just be a bit conservative. Let's use the 40% EBITDA margin. Okay. Now, let's make some assumptions here. Okay. So right now, for 2021, we're expecting to see approximately 1.9 billion in revenues. Okay, but let's make the case that over the next year it grows by the IMT segment grows by 15% year over year. Then you reach 2.4 billion in revenues for the IMT segment. Okay, let's take that 40% EBITDA margin, and you end up with 945 million. Okay, so it's difficult to understand. I learned from the cash flow statements, kind of did some assumptions here, but it's quite difficult to understand within the IMT segment, it's capex. So I've kind of made the assumption here because after all, it's an advertising platform. So I've made the assumption that the IMT segment converts the EBITDA to free cash flow at 85%. So it's an assumption on my part, okay? But I think this is quite reasonable if you spend some time dissecting the cash flow statement and you look at the capex. I think that you'll agree 15% is 15% of capex from the EBITDA is quite reasonable. You have to start somewhere, start there. So that converts to 800 million of free cash flow next year. So if we take that number of that I put out here, so 945 million of EBITDA next year at 85%, you end up with 800 million of free cash flow. Okay. Now the mortgage side segment is growing. Now it was growing because of the iBuying side of the business. So there's some kind of slowdown into Q4, but it has some value as well. I don't know what value it has. I've asserted a one-time sale multiple because the company, as you can see here in the figure, was had adjusted EBITDA profitability of 7% last quarter, but going into the Q4, it's pointing towards negative 29%. So as I said, iBuying does well, and then they were able to kind of do some more loan origination iBuying is out, that's going to compress, but they're still intending on growing out this mortgage business. So it has historically been growing at a very rapid rate, but let's say it just kind of fizzles out. So this year it's kind of going to report 250 million of revenue. So the mortgage side of the business. So I've given a one times multiple to that. I think that's really conservative. That gives me plenty of wiggle room here. But so just one time sale, that means that this side of the business is worth 250 million of the market cap. So if you look at the market cap, 15.5 billion, subtract out the 250, you're just under 15.5, close to 15 billion market cap for the IMT segment. Okay. Now, just one more thing I wanted to highlight. So Zillow announced that they're going to repurchase 750 million worth of stock. Now, this tells us two things. First, it gives you a 4.5% return on investment. Okay, so it's not a big deal. And some people say, oh, that's just temporarily put a floor on the business, on the share price, but it's not really going to do that. That sounds really kind of like cool to say, to be a cynic, but ultimately you have to think about this, right? Who owns the most amount of stock in Zillow? The founder and the co-founder, the two co-founders. They own the most amount of stock. So they are fundamentally aligned. They founded this business in 2007. In 2021, they still own the biggest amount of the business. So they're not in it for a swing trade. They're really fundamentally aligned. What's more, with all the lawsuits that have been hitting Zillow in the past several weeks, for them to make this announcement, they're going to buy back 750 million worth of stock, they must think that the business is fundamentally stronger than a lot of people realize. For just for reference points, Caledonia owns approximately just over 25% of Zillow, and they've actually bought a tiny bit more of the stock. And they believe, so obviously they're really entrenched here because obviously it's their biggest holding, so they have a lot of bias here. But they believe the business Zillow could be worth $175 a share. Now, remember, they have to say that because it's their biggest holding. They've had a huge drawdown in their fund, so they're like they have to do something. So I understand they're under pressure, whatever. But they have a good grasp of what the business is. They sit down with the CEO and the chairman, so they got a good grasp. They believe that it's worthwhile buying some more, so they bought a tiny bit more. Now let's go back again. Zillow's market cap is 15.5 billion. You give 250 million to the mortgage segment, you end up close to 15 billion market cap for the IMT segment. Within that, if the business over the next 12 months makes 800 million of free cash flow, you're pricing that business at approximately 19 times for its free cash flow. Now think about that. A business that's growing at 15% compounded doesn't often get priced at 19 times free cash flow. I mean, I can show you plenty of businesses growing at 15 times their revenues, 15 times 15% compounded, and they're probably priced at, let's say, 10 times forward sales or 15 times forward sales. I mean, look at like countless of these kind of asset-light software and advertising businesses that are priced at 10, 12, 13 times forward sales. So I'm just saying this business is priced at 19 times forward free cash flow. It's probably cheap. Now, here's the thing, right? The moment of maximum fear is paradoxically the moment of lowest investment risk because ultimately there's a lot of fear out there. Okay. Now I understand that if someone goes and kind of buys the valuation right here, right now, you're not going to time to get the bottom. Most likely things are going to continue selling off. But over the next year, when things kind of stabilize and you get a multiple expansion, let's say to kind of approximately, let's say 25 to 30 times free cash flow, the market cap returns to approximately, let's say, approximately 21 billion. Now, that's approximately 30% higher from what it is right now, and it's not like a home run. But as Peter Lynch says, those long shots become no shots. You're much better to try and play it safe, slow, and steady, and just compound slowly over time rather than go for these heroic moves. Okay. Anyway, if you want to find out what kind of names I'm interested in right now, don't forget to check out my marketplace called Deep Value Returns. I help you become a better investor, help you think through investing, and yeah, give you high quality, actionable investment insights that I'm buying right now. Thank you so much for listening. Bye.